Yeah, sure.
By 2030, what do you think compared Vietnam to Thailand in the next 7 years?
Next 7 years.
Yeah, Thailand compared
How,
to Vietnam.
I mean,
Or, hmm
I mean, they're not gonna catch up. Vietnam not gonna catch up with Thailand by then, but I think the prospect will be much brighter with their like demographic. In like 7 years, I think average age of Thai people are gonna be like 40 something, while Vietnam gonna be like 30. Well, and they just entered like middle income classification. I think it's like for 4,000 something US dollar per capita. So if they continue growing like 5 to 10% for the next, let's say like 5 years, they're gonna reach like 7 to 8,000, I say. So could be a good place to be, I think.
Yeah, and I guess
so
it's going
should
to get a lot more
mm,
foreign direct investment from China compared to Thailand, or I wonder.
I mean, I think you've got that they are more favorable in the eyes of the European, I think, because they have the FTA with the European Union,
Right.
where when Thailand doesn't. So I think that's the key advantage from the manufacturing point of view, I think.
and I think the biggest FDI is from Korea also, Korea and Singapore.
Oh yeah, I see a lot of Korean people here.
Yeah,
A lot of
Korea and Singaporeans have the largest FDI in Vietnam.
yeah. I mean, I think China gonna catch up soon because they told me that the Chinese stopped coming in because of the what is the zero COVID policy. They're gonna travel, so when they couldn't see the real land, the real picture of what they're gonna invest, that they weren't gonna invest back then. But now that they can come out, I think we might see a bit catch up from China. But that's my personal view. Yeah.
One more question.
Yeah, sure.
So you think China plus one is going to be Vietnam?
I think so.
Hmm.
It's easy because uh it's right on the border of China. I think it's easy to move stuff to Vietnam.
I think they are very good in infotech also. Vietnamese are very good. They're very smart in IT.
Yeah, in the tech is. I think that the tech they're trying to encourage like R&D investment in their country. I think that's like what they ask the MNC to do in exchange for their uh, location of the manufacturing facility. That's what I heard. I'm not sure. There aren't any official report, but that's the word from the ground.
So how does a common man invest in Vietnam?
Common man.
Wait a minute.
Like,
You calling yourself common? Come on.
I think it's a bit risk. I mean, like it's a bit restricted. I think because it's still a frontier market, right? So I would say like for passive, for the one just one exposure in Vietnam, I think diamond ETF is a good one to be.
Diamond ETF. Can we buy from Thailand diamond ETF?
Yeah, Thailand. We have like a DR, like a depository receipt trading in stock exchange of Thailand. You can get direct exposure to ETF diamond in Vietnam, but I'm not sure about other places. I think they should have like something similar, or at
They
least like
have
a
in
fund of fund.
they have in K Bank also. It's called K Vietnam.
Yeah, I think that one is active fund. So they
K-Bank's picking stocks.
yeah,
Okay.
and they subject to foreign ownership limit, while the ETF diamond doesn't.
Oh, K Vietnam is active or not passive? I thought it was passive.
I think it's active because I met someone from K asset here as well.
Oh, active is not good. And what about Phenomena? Does Phenomena has any Vietnamese ETF?
I think I need to pass that question to Andrew. I'm not sure.
Yeah, and KP. I
It's
think,
probably to me then. Phenomena recommend one fund called Principal VNEQ. Is also active fund as well as similar to K Vietnam. K Vietnam is also active fund.
Okay. So I'm sorry again. Can you repeat? Sorry.
Amit was active hugging right there, so that's okay. You may have to repeat that. There we go.
Okay.
So we
sorry.
typed in something there.
Yeah. Phenomena recommend one active fund. It's called Principal VNEQ. It's active fund. It's a direct investment. It's not a feeding fund that feed to the foreign fund. It's direct investment from Thailand direct to Vietnam. But it's active fund, not the passive way, just like Diamond or other ETF.
So K Vietnam is active? I thought it
Yes.
was passive.
Yes,
Yeah,
it's
it's active.
active. It's direct investment active from Thailand.
If you want
Is it good?
active,
No, I don't want
think-
active.
yeah, if you don't want active, then you should go with like ETF, Diamond, or VN30.
I made a big mistake then.
Why?
Well, maybe the
I
K,
thought
maybe
I
the
thought
K
K Vietnam was
asset
passive.
fund, maybe the K asset fund managers are index huggers. So they're just hugging the index. Let's see. I wonder how active their bets are.
Based on my last review, it's just like the active just about, I think it's like 70%, and then they hold Diamond ETF as well to like to
Yeah, a lot.
hack the
I think
index.
a lot of fund do that because not because they wanna hack the index. I think it's because it's kind of like an indirect access to like the mobile world, the super stock that got full volume limit. So that way you can get exposure in those stocks.
Yep.
Yeah, and
so
also the liquidity aspect as well, because the active fund in Thailand, they cannot hold 100% single stocks because the liquidity is relatively lower than in Thailand. So if there is an outflow, like huge outflow of money, let's say everyone in Thailand would like to sell the active fund, they could, the fund manager, they couldn't sell at a good price. So they have to hold like more liquid asset like Vietnam ETFs that someone mentioned, like Kapun of Budesha mentions, and also Vietnam 30, and also Vietnam Financial Industry ETF, something like that.
And so, can you just explain that for a second about the difference between an active and a passive when it comes to liquidity events? Let's say everybody's selling. Is there a difference between that active fund and what Diamond ETF would go through as they sell?
I mean, if you look at the bid and offer in the Vietnamese stock exchange, some stocks, maybe not some stock, but most stocks, bid and offer volumes are not that huge.
Right.
But for the ETF, which like most of them are managed by Dragon Capital or something like that, and many asset managers firm, bid and offer volume are way more attractive.
Okay, so you're saying there's more bid offer volume on the Diamond ETF
because they have the market maker. So
yeah, exactly.
You can look at I think October of last year. You will see that a lot of stock when the panic came, there was no bid at all. While you can still trade Diamond ETF with like the within the range that they allowed to trade, like 7%.
Yeah, exactly. And another point that Phu Desha and not sure Phu, right?
Yeah.
Mentioned is a good point because the foreign ownership limit in Vietnam is slightly is very varied. Some industry the limit is maybe 49%, but for some industry like bank, probably the limit is like 30-something%. So if foreigners would like to buy Vietnamese stocks, they have to own indirectly by using diamond ETF. And the benchmark of diamond ETFs is not, I mean, how they select the stock into a diamond ETF basket. It is not about only size, but they consider foreign ownership limit and PE ratio and liquidity and probably another like magic formula something.
And
Yeah.
with that diamond ETF, is diamond ETF seen as a domestic investor, or do they have some foreign?
Yeah, it
It's
is domestic.
as domestic.
So it's not restricted to foreign shares.
Yeah, correct.
Okay. And what about the K Vietnam fund? Is that viewed as a domestic or an international fund, and therefore it has to buy foreign shares?
Yeah, it's that they have to buy foreign share. They are foreign institute.
Okay, so therefore that also means there's, let's say, more access to the market for diamond ETF.
To a certain level and to only a selection of stocks. But yeah, it's like an alternative. Yeah,
Okay. And what's VN30?
it's like SEC 50 is a top 30.
But I mean, is
Stock
there,
in Vietnam.
is this an ETF, or you just? Is
Yeah.
it- okay.
They have an ETF as well.
And what's the difference between diamond and VN30?
VN30 is the top market cap.
So
But-
what, diamond owns 50 stocks?
Diamond, I think is no, just I think less than 20.
Yeah, I think so.
I think it's like
More-
17.
Okay, so VN30 is more, almost double the number of stocks.
Yeah.
Okay,
In terms of the sector, VN30 gonna hold like 40% bank, 20% real estate company,
Yeah.
while and with only like 10 consumer and retail names, while in Diamond, the bank and real estate gonna constitute only 40, while like 20 to 25% or 30% right now is gonna be in retail. So if you want exposure to like more of the retail, the consumer side, Diamond is the place to go.
and one of the things about Vietnam is inflation rate has been really manageable. Any thoughts on what's going on with inflation in Vietnam? I think it's like 5%, 4.9 or something like that.
I mean, it's coming up a bit. So they're telling us that they have no problem, but I think we need to wait and see, because once the Chinese economy open, I think that the food price, the commodity price here went up a bit. Not sure, still in the manageable range, but I think we need to take a closer look to that as well.
Good.
But with all that being said, the valuation is very attractive right now.
What's the PE of the market right now?
I think it's like 10.
What?
Wow.
Yep. It's like -2 standard deviation below like historical mean right now.
Mm.
So yeah, with that being said,
is active
go ahead.
good? Is active good or passive good for Vietnam? Or both?
I mean,
Or mix of both?
I mean that I think that's kind of subjective.
It sounds like diamond is a good, option.
Yeah.
Yeah.
And Sorowit also mentioned the Van Eck fund, that's in the US. Yep.
Okay, so sorry guys, I got to go.
All right.
So,
Thanks for that.
Thank you. Thank you.
I'll tune in for the replay. Okay.
Okay.
Yeah. Bye. Have a good day.
Thank you.
Bye.
So how is everybody? Jan, you're back. Good to see you.
Yeah, good to see you too. Have been a while, but yeah, I'm back and we'll be back every 2 weeks.
And where are you in a new location now, or are you still?
No, I'm in the Brussels. I was traveling in Zanzibar a couple of weeks ago, and it was very nice. I didn't want to leave from Zanzibar back to Europe.
Remind me, was that your first trip to Africa?
No. It was my first trip to Tanzania.
Yep.
But it was already my several trip to East Africa because my girlfriend is Kenyan.
Yep.
So because of that, I traveled there more often.
When I was at USTC, our university that we went to in China, I talked to some guys and I asked them, they were at a table, and I said, "What country are you guys from?" And they said, "We're from Tanzania." And I thought it was Tanzania. And then I got confused. What do you call it? What is it called there?
Well, that's a good question because I was in Zanzibar and everyone calls it Zanzibar. So
Yeah, okay, yeah.
Yeah.
But I didn't know. I was wasn't sure. Tanzania is what we always said about that. So, all right, tonight I'm going to go through some different stuff, and I think the first thing that I just wanted to touch on is that finally we revamped the Valuation Masterclass Bootcamp Module 1, and it was intense, and it was a huge amount of recordings, and it ended up being 9 hours of recordings, and really a great improvement. So for anyone that's got friends that are thinking about taking it, now's a good time. Also, for those people that have already taken the Valuation Masterclass Bootcamp, we're going to send out a message to say, check out the new material, and remind everybody that they can go back and look at it. So I didn't have the time I really wanted to start working on the curriculum, but I'm going to now show you just briefly a little bit about what we're making available. Now, some of you guys know Momen and some of you don't know Momen, but Momen was in the Valuation Masterclass Bootcamp and now is working with us. And Momen's going to help, bring some activity and stuff to the group, and also help in a lot of other ways. So you'll get to know Momen more, and feel free to ask Momen any questions if you got something or a request for anything. So I'm going to share my screen, and I'm going to talk about this module that I'm working on within what I call the curriculum is called Build Life Skills. And these are the books that I'm going to be rolling out for everybody in the community. And once you're in the community as a paying member, you'll get access to all of this for free. And the first one is Atomic Habits. The other ones are in different situations, but they'll be happening pretty soon. And Atomic Habits was written by James Clear, and it really is one of the top ranked books of all time. Part of it's the way that he wrote it, because he kind of wrote it chapter by chapter as a blog out to his audience, to his email list. And I'm not going to go through the whole course because you'll be able to go in and access it, but I highly recommend that you check it out. And these are the sections of the course. And in this part, I'm just going to go through a couple of quick things. But as I say, this is my interpretation of Atomic Habits, which is right there on my bookshelf. And in the platform, now we're going to install this onto the platform, the membership platform we have. So I'll kind of skip through it, but basically you'll have some downloads that you'll be able to get in there. And I'll show you those downloads. Whoops, my computer just moved fast. All right, so there's 3 core downloads that you're going to get in this. The first one is the cheat sheet. And I put a red box around that one because that's the area I'm going to talk about in this particular section. The second thing you get is a quote sheet. And the quote sheet is the most common quotes out of this book. And I'll tell you the trick to how I got that. If you go on Goodreads, they have quotes from books, and they're voted, upvoted, downvoted, liked. And I scrape that data off, and then I look at what they say, and then I look at what Kindle says, because Kindle will show the most quoted sections. And from that, I can say, okay, these are the top quotes that people appreciate out of this book. And basically, that starts at the top with the most common and most voted, and then goes down to the bottom one. And then finally, you're going to get a worksheet, which is showing how to set your goals. And you'll be filling out the worksheet as you go through the course. This is the worksheet that I use in my Achieve Your Goals Mastermind group, and we're really focused on this. And also, I bring in 15 experts to speak on habits. And the point is that what I've really come to understand is that I used to think it was about goal setting and tasks and all that. Now I understand it's about habits. And one of the things that I find fascinating, I try to make this kind of strong, is that habit is a framework, not an action. That's the thing that James Clear really taught me. Also, there's another book that came before this called The Power of Habit by Charles Duhigg. And he also is the one who really introduced the habit framework. And if you understand this habit framework, you can master your life for sure. And habits help us build simple ways to handle life's challenges. So I said I'd have 15 experts. Here's one of them, Samuel Johnson. He's passed away a long time ago, but he wrote a dictionary of the English language and is known as one of the greatest single achievements of scholarship when he wrote that. And here's what he said: the chains of habit are too light to be felt until they are too heavy to be broken. That's wisdom. And then in this course, I go through sections to try to talk about, applying habits to solve problems. And the point is, we try to solve problems with as least effort as possible. And we repeat new habits until they become automatic. And small habits repeated over a long time bring massive change. Let's bring in some words from Aristotle. What did he say? We are what we repeatedly do. And that's so true. The other thing that I learned from this book and this particular chapters and section is your habits will determine if you achieve your goals. And I just want to stop for a moment and think about it. Are you achieving your goals? Have you achieved all the goals that you wanted to set? If you have not achieved your goals, you really need to look at your habits. And that's really the big lesson out of this book. And I'm not going to go through all the content in it, but I just wanted to highlight it today so that Momin's going to be uploading it into the learning platform. Momin, you're going to say something?
Yeah, I'm uploading it right now.
Okay. And then you guys are going to have access to it. I'm going to be teaching a class at university in a couple months that's called Global Leadership. And basically, I'm going to be using these different books. And the first part of the course will be, I think Alex is probably kicking on because he's saying he's got to go. Huh? Alex, are you saying anything?
No,
Just
showing my face.
Oh, yeah. I wish that, Hui Kun and, KP show their face. Aside of all I got to see is the men, here, but, we'll accept that. Yeah. So yeah, exactly. Anyway, so the point is that in that class, I'm going to present the material of each book for about a half an hour, 45 minutes, maybe an hour. And then we're going to break out into a discussion of how we apply it. And why are these books so critical? And it's because I've already worked so hard to identify what are the top books of all time. And so, the books that I'm covering in the curriculum are a lot of really, really the most valuable books. And for the curriculum, it's going to be about 25 or 30 books eventually. So every area of your life, you'll be able to catch up on the best books in that area. And now I think I've got all of them here on this shelf now. And maybe I'm just missing one or two. But So the point is that that's going to be a tool that's available for everybody. So that's exciting, and I've been talking about it for months, and finally getting to it. Tisa is on. Welcome.
Hello.
How are you? Now we get better ratios of women to men.
Thank you. Sorry, I just have video for today. Yeah,
No
let me
problem.
be in the dark.
No problem. No
Thank
problem.
you very much. Nice to see you all again.
Yeah.
It's fun
Now
to-
I'm gonna. So, anyways, we'll announce that, and everybody will see it in the group, and then we'll go through with that. So, what I want to do next is I want to talk a little bit about inflation, and I'm going to be creating a video and all that, and you'll see my work in progress is, you know, kind of messy. And we have a lot of meetings this week. We have about 50 students presenting their final reports in the boot camp. So it's nonstop meetings and presentations. But I have managed to squeeze out a little analysis on what's going on with inflation. And what I wanted to do is just walk through some of the parts of that. So the first thing I wanted to show is what happened with US CPI, which is up 6.4%. But you can see that the peak was in June of 2022, and it's just been slowly and steadily coming down since then. And therefore, you could argue that, you know, the US has passed the peak and now inflation is coming down. Now, if we look at food, you'll see that it took longer for food, and food rose higher than overall CPI, but food is slowly coming down. And that, you know, it takes time for these things to feed directly into the food supply. Also, we've had a lot of shortages of food in the US in particular. Now, I also wanted to bring out the energy component, which you can see here is a very volatile data series. The energy is on the right-hand scale, which I didn't put in here, but that brown line is really moving quite a bit. But clearly, the energy shot up quite a bit and then started to come down, and that's part of what's bringing the inflation down. That also tells you that if oil prices were to spike again, then we would see inflation spiking also. So what I've done here is just say, okay, let's look at the CPI, let's look at food, and let's look at all items excluding food and energy. And that is the green line. And this part of what's interesting here that you can see is, I'm going to grab my my pen. And part of what you can see is that this is kind of flat. It's slow to come down. And that's because of owner's equivalent rent is the way that they account for the rise and fall of housing prices. And it takes time for that housing component in CPI to adjust. And now if we bring together CPI, the red line, food, energy, and all other items, what you can see is the volatility in the energy. And I was just looking at the year-on-year change of CPI, the red line, and the US house prices. It's pretty incredible what's happening with US house prices. And US house prices are, I believe, I'm not sure which scale, I got to check that, but as I say, it's a little bit messy. But the main thing that you can see is both oil prices down and US housing prices are down pretty massively. Here we can see oil price now is into negative territory. That blue line is now down in as negative 6.1%. And then I was just looking at some of the other items, which I'll just skip through. But that gives you a picture of what's happening with US inflation. And I thought it would be interesting to look at world inflation a little bit. So I think to sum up the US inflation story, it seems like the Fed has controlled inflation and they haven't yet crashed the economy. Now, I would say that we know there's a lag time between Fed action and the impact on the economy. And so our estimates are that in the middle of this year, we will begin to have a recession in the US. And if you look at, people look at unemployment and see it's super low, and they think that's positive. But for anybody looking at trends, you know that when it's super low, that's basically telling you that it's almost as good as it can get. And I suspect that we'll see, job losses start to really come in and the economy start to slow down. That's still my expectation. But, when you look at it, you could say that the Fed could pull off a soft landing. So that is kind of my perspective on what I'm seeing. And I haven't drawn my final conclusions on it, which I need to do at about 4 a.m. tomorrow morning and then pull it together as a video. But you'll see a little bit of that work in process. Maybe I'll just share the next part of this, which I created a cool table, and I'm hiding most of that table here. But what you can see is that globally, world inflation is at 7.5%. And the GDP of the world is about $90 trillion. And I'm going to go through and look at inflation in different regions. And as I do that in different countries, you'll see the differences. The first one that we can look at is developed versus emerging markets. And what's fascinating is that they're converging. Developed is at 7.2, emerging at 7.9. They're pretty close now. So now let's look at that for a moment. And also what's interesting is developed markets have a GDP of about $52 trillion and emerging about 38. So emerging really is rising and will eventually, I suspect, get bigger than developed. So here's a chart that shows what has happened with developed versus emerging relative to the world. In all of the charts, I make that big, bold, black line, the world. And we can see that the emerging markets, if we go back to before the Russian crisis, the Russian-Ukraine war, these items were pretty close. But then risk ran up in emerging markets, inflation shot up, and now they still maintain a premium versus a discount for the developed world. Now let's look at that developed world for a moment. You can see Americas, Europe, and Pacific. And where is the inflation? It's in Europe. It's not in the Pacific, particularly in the developed markets. That's mainly Japan. So let's take a look at what it looks like. Don't mind the text that I think this text is okay. I think I wrote that, but I haven't filled in text on a lot of them. But here we can see that we can get a picture of what's happening by region. And Europe and Pacific are still rising. So now let's look at emerging. Now emerging has 5 regions, including frontier like Vietnam. And we can look at those 5 regions here to try to understand what's going on. Now the world, I didn't make this a bold. All the other times I talked about the world, it was black and bold. But I think I forgot to do this one. But it gives you a picture of what's happening in frontier markets and what's happening in emerging Europe. And it's massive. For those of you that know Moment, you know he's in Egypt, and they're facing a lot of challenge when it comes to inflation, for sure. So now let's look at the countries. What I decided to do is focus on the top 5 countries per region. And let's first look at the US in Americas. The US has a $23 trillion GDP and 6.4% inflation. Canada's just $2 trillion GDP and 6.3%. So really it's the US. But what you can see in Europe is it's pretty evenly spread out. Germany at 4 trillion, UK at 3, France at 3, Italy 2, Spain 1.4. And then you can get a picture of kind of where the inflation is. And we can see that in Germany, in the UK, and in Italy are seeing the biggest inflation. In fact, we had a lot of protests in France, but it was interesting to see France inflation is, below average. If we say average is about 7.5, or within the developed markets, 7.2, we can see that. Now, also what we can see is in the Pacific, inflation starting to rise in Japan, and here we see very low in Hong Kong. So this gives a picture about what's happening with inflation. Here we can see the inflation rate of all the different countries. You'll see that some lines do not extend all the way, whereas others do. If they extend all the way, it means we've gotten recent data. If they don't extend all the way, like UK, we haven't gotten their data. So we did get the US, which is the red, but we haven't gotten France, and we haven't gotten the UK, and we haven't gotten Japan. So those are coming. And here we can see the top 5, or actually, I think I looked at 6 here because I wanted to have Thailand on there. But you can see the top 6 countries. And really, these are the countries that matter. And, you know, as I said, Momen is in Egypt, and the inflation, most recent inflation rate is about 27.7. Momen, what's it like dealing with 27.7% inflation?
I guess it's like pretty massive these days. You can, like, if you go to the streets, you can see people are talking to like to themselves. What we gonna do? Everything else is stable. No salaries, there is no benefits. You know, just the struggles. So I guess it's gonna continue on in this pace, as the people responsible for handling this stuff are, I guess, the dumbest people on earth. So I don't know what we're gonna do, but I guess may Allah have mercy on us, as it's like
I guess what happens is
a lot of struggles.
the currency gets hit so bad that eventually people start buying the currency again, and then it starts to increase, and then that has less imported inflation. That's kind of the way it typically goes, but who knows when people will be ready to start
They
buying.
are increasing, they are increasing the rates so that, like, to grab people to invest, but I'm here, I'm not gonna invest.
Yeah. Yep.
It is like too risky to invest here.
Yep. And we were just looking also at Vietnam, I was saying that Vietnam inflation is really, really low. So if we look at the top, now basically what I'm looking at here is China, because China has 17.5. I'm looking at India because it has 3.2 trillion in GDP. I'm looking at Korea, which has 1.8 trillion in GDP. I'm looking at Russia, which has 1.8 trillion. And I'm looking at Brazil, which has 1.6 trillion. So we can say that these are the 5 biggest economies in the emerging world. And therefore, I want to look at what's happening with them here. And we can see one of the interesting things is that inflation in Russia just keeps coming down. It's still high at 12%, but it's been falling. And then Brazil had been increasing its lending rates quite a bit, its interest rates, and that started to slow down and bring inflation down. And here we can also see that China's inflation is now starting to move up, but there's a lot of reasons why China inflation is still pretty low, and may be low for a long time to come. Now, I'm just going to go through, in the developed markets, these are the countries that have the highest inflation. And I was interested to see Sweden there, Alex, and we can get a picture of kind of what's going on with the ones that are in the developed markets that are much higher than the world. And then I wanted to look at, in the developed markets, which ones are the lowest. Again, if the line does not extend to January 23, it's because we haven't gotten the data yet. But we can see that the lowest is in Hong Kong, followed by Switzerland, followed by Japan, followed by Israel and France. Now, I wanted to also look at what was the biggest rise. And in the developed markets, the biggest rise came from Sweden, Portugal, Italy, Austria, Germany. And Europe's just taking, a pretty big hit. And this is the smallest rise. In other words, in the developed markets, the countries that really haven't moved. So Belgium, interesting to see. Jan, what do you think about that? So according to the data that I've got, inflation's a little bit over 7%. It spiked up, but now it's almost back to that level. wonder what's going on there.
Well, it's a little bit hard to say. I would say that I think the inflation here mostly was driven by the energy prices, which rised, and then the energy prices collapsed again. So that's my take on this regard. Because the inflation here is not so high compared to, let's say, Czech Republic, which is 18% almost.
Exactly. Czech, and I'll take a short look into, let me just show, I'm going to share my file. 1 second. So for those people that are number nerds, this is our file that we use for the global CPI. And I look at CPI by country, as you can see. If it's an NA, it means that the country hasn't announced yet. And so in that case, sometimes I'll use the latest figure rather than the NA. But here we can see the Czech Republic, which is right here. And we can see about 18%. So that's brutal. And just for those people that are number nerds, this is where I then accumulate it by region. And I bring this down, and then I look at the GDP of each country. So it's ranked by GDP and by region. And then after that, I create my tables that I use for the charts that we're looking at. And then I actually create some text where I can actually write the text of what's happening. And that, if I take this text and let's just say that I open up a Word document, and let's just look at this for a second. You'll get a peek at how I write stuff, particularly for PowerPoint, is once we have it set up like that, then I get the data that I want. So develop beginning in the beginning of the 12 months, it was at 5.5 and the ending was 7.2. The year-on-year change is 1.7, and the beginning relative, so developed market relative to the world, developed market was more, was actually at parity with the world. And now developed markets are less than world rates compared to emerging markets. So that's a little tool that I do where I've written out and put together a formula of what I want to see. Once I've done that, then I start to create my charts. So the charts that you're seeing here are all coming from this. And then we have our own tools that we use. And this one's called Copy Chart. And then that allows me to put it into the PowerPoint. So that just gives you a little background of what's going on behind. Now, here we can see some of the places in the emerging markets that's the highest. Czech Republic doesn't actually make it up as the highest. The lowest of the highest we can see is Hungary, which is right next door. And Sri Lanka is still struggling, you can see, and Turkey's up there. Argentina is really blowing out, absolute blowout. And then in the emerging markets, these are the lowest ones. And we can see Malaysia actually coming down quite a bit. And some of the other ones like China remains very low for CPI with a slow uptick. And then in the emerging markets, the largest rise, well, we can see that the largest rise has been, well, it's a combination. You have Sri Lanka's been a pretty big rise. Argentina, all of these countries are suffering. And then within the emerging markets, these are the countries that have the smallest rise or have a fall. And that would be Brazil, India, Taiwan, Mexico, and South America. So this gives a picture. I haven't really drawn all my conclusions yet. As I say, I got to do that tomorrow morning and early in the morning. But it gives you a little bit of a picture of what's happening with inflation. So maybe I'll stop there. And if anybody has any questions or comments or anything, feel free to share.
Yeah, I have a question about the Czech Republic a bit, because I'm a bit confused about one thing. Czech Republic doesn't have a euro. We have a Czech crown. And we are a small country where we buy most of the stuff from other countries. and and the Czech crown compared to other currencies is now one of the strongest in his like 10-15 years history. But despite that, we have a very high inflation. So when our currency is stronger than was before, we buy a lot of stuff. So it should be cheaper, not more expensive, right? So what is actually here fueling the inflation?
First question is, what's the interest rate there? And
yeah, about 7%.
Huh?
About 7%.
Okay, so not extremely high, but you could argue that one of the things that's happening is that investors are making a bet and putting their money into the currency at a good, level of interest, and that's keeping the currency strong, or not sure.
Yeah, because that's the mechanism behind it is a bit confusing to me, right? Because anyway, our currency should be strong because of the central bank's interventions, that they actually buy a lot of Czech crowns to keep it stronger.
And in theory, if your Czech crown is stronger, it also should mean that you're importing less inflation, right? Your currency can buy more of foreign goods. When your currency is devaluing, then you're importing inflation. And so I'm not exactly sure where the inflation is coming from. I guess energy is part of it. What about food? I know in the case of Egypt, one of the big imports is food, in particular wheat. And I don't know about Czech Republic, what's the dependency, or is it self-sufficient for food?
Well, we are not self-sufficient. We import a lot of food, but it's mostly from Western Europe, like Spain, Italy, and so on, which is again like a Europe-nominated country. So
yeah, I mean, I can definitely say that if you're putting money into a bond or a deposit account that's in euro, you're going to earn less than that 7% for sure. But I don't know. I'd have to look at it in more detail.
Exactly.
Yep. Other questions or comments or things that people want to share or anything? We're going to wrap up in just a bit. So, yep, KP.
May I ask for your thoughts on Thai interest rate? Because inflation here is not that high, but I'm not sure we are seeing another hike coming for Thailand.
Thailand's been able to maintain its inflation, prevent it from going out of control without having super high interest rates, which is interesting. So, Thailand does have food dependency for sure, independency. And that's good. When food prices were rising around the world, that's the type of thing that hit, as an example, Egypt, Kenya, even some countries like Nigeria and others that don't have as much food to feed their population. So Thailand had the benefit of food, and really that's a huge savings, because we still are a major importer of oil. Now, also as a major importer of oil prices going down, then the price that we're spending is going down. And so maybe that's, feeding through less. Also, I think workers have less bargaining power in Thailand. Thailand did a really sneaky trick many years ago when it came to unionization. And they welcomed, to some extent, unionization in Thailand, but by company only, not by industry. So in the US, it could be that truckers across the US are in the same union, no matter what company that they work for. But in Thailand, they have a Bangkok Bank union. They have a Kasikorn Bank union. And the banks have friendly relationships with those unions, and those unions are not working together to force for higher wages. And I know that the AFL-CIO, which is kind of a left-wing arm of the US government, tries to get them to organize to get better pay, but they've never made much progress on that. So I would say that the average wage in Thailand isn't under a lot of pressure. That's my guess. But since I've been up since early this morning, my guesses could be getting a little weak right now.
So I'm gonna have to let you guess another time, right?
Well, no, that's the best guess I have right now. This morning I did an interview with this guy named Louis Vincent Gav, and he has a business called GavCow, which is a research operation. He came to Asia about the same time as me, and so I've always seen his research. I never met him. And then I did like an hour and a half interview with him on the podcast. And one of the things I'm trying to do with the podcast is start to do what I call investment strategy made simple, where I try to understand what different strategists are doing. And I try to bring it back to what we look at in our portfolios. The first thing is stocks versus bonds, and then stocks, bonds, commodities, and gold. And he had some really great, it's a great discussion. And he talked about China opening up is a major thing. I'm just looking at my notes. And already we've seen the price of copper, the price of lumber go up because of Chinese demand rising. Then he talked about China exports rose during COVID. And basically, the Chinese business owners held those dollars. They didn't necessarily invest them in treasuries, and they didn't convert them into renminbi to invest in expansion in their factories. So his argument is that they're holding a lot of dollars, and now they're going to spend those dollars. And they're going to go to France and spend, and they're going to spend on their factories and all that. And that means they're going to sell those dollars. And that's going to cause downward pressure on the US dollar. So that is one of the things that he's saying, which is reason why he's positive emerging markets, positive commodities, and positive gold. Now, he also talked about the yield curve in Japan and how yield curve control is ending in Japan. He said Japanese have been chasing yield because interest rates have been so low that they've had to go outside of Japan to try to get any good yield. But what's happening is that as interest rates rise in Japan, that Japanese yen is going to come back, and therefore, again, more selling of US dollar, more buying of Japanese yen. So he sees the US dollar to be weak going forward. He also talked about something else that I just found fascinating. He said his estimate is that the governments across the world have spent $6.5 trillion in the last 20 years on solar and wind. $6.5 trillion. He said, really, that should be my worst investment ever. When we talk about worst investment, he said it's the worst investment any government probably ever made, given that the renewables coming from wind and solar only account for about 2% of total energy. And as I said to him on the podcast, whenever the government gets into anything, they destroy it. They pump money in thinking that they're going to save everybody, and money going in does a couple of things. Think about the US education market. It used to be free market education. You didn't get money from the government. You could get some sort of minor guarantees from the government if you borrowed from a bank, but you went to a bank to borrow a student loan. Now, all the student loans are owned by the US government. The banks are out of the student loan business. They don't do it anymore. It's the US government giving it. And that's the reason why the US government says, we can give a haircut or whatever. But what they did is they made student loan money available to everybody. Once you do that, you push a huge amount of money out into the system to be spent on education. And then what happens next is that the number of people applying to get seats at university rises massively. So demand is rising, but the supply isn't rising that fast. And so universities do one thing, and that is they raise prices. With a flood of money coming in, with giving access to millions of people, the demand is extremely high, and the result is they cause inflation. And now when we talk about what's happened, they've completely distorted the solar and wind markets and wasted a huge amount of money in them. So he was talking about that. We were also talking about energy and what's happening with oil and so many different things. It's a great episode. It'll come out in about a week or so. And I'm talking with him, in detail about this stuff as I'm trying to do now more. I've got 500 strategists and financial professionals worldwide that I've sent out invitations to come on the show to. And so we're starting to get some bigger name people on, which I'm excited about. And that's it.
Thank you.
Yep. All right. It is 7 o'clock, so it's time to rest a little bit. And we will continue to be in touch in Slack. And Moment, you'll see, is bringing in some articles and bringing in some stuff and bringing in some love and all that. And I'm going to keep working every weekend. I'm going to try to do another book and bring that out to the community so that everybody in the community will have access to the curriculum.
Okay, thank you. Bye-bye.
Bye.
Okay,
Right.
thank you.
See
Bye-bye.
ya.
Thank you for today.
Yep. Bye.
Thank you.
Bye.
Bye.